Hi guys, welcome. I'm here with Alex, and this is another chat with traders. Alex, if you can please introduce yourself, that would be fantastic.
Sure. So, hi everybody. My name is Alex Douedari. I've been in trading for, I would say, over 15 years by now. And over the course of my career, I've been on different sides in the industry. I worked for a private bank in Germany. I worked for a hedge fund in Switzerland. I've won some investing awards over the time, and I've run or am running a mentorship as well. So I've really been all over the whole, let's just say, spectrum of where you could be, what has to do with trading. And I'm very glad to be here today with you, David.
And you have a YouTube channel as well, right?
Mm-hmm. That's right. It's basically my name. It's Alex Douedari, and I share on that channel, a couple of my learnings. In my mentorship, I try to focus. Let's just say a lot of people try to teach people one certain trading method. And that's not really my approach, because if I had to think of what was the one thing that kept me afloat over almost 2 decades by now, it's the ability to strategize, to come up with strategies, to see things in the market, to prove them right, to prove them wrong, to create methods around them, to be able to spot them myself and do them. So I focus on strategy development. I teach people how to develop their own trading strategy with all the details about it. And of course, I help them out with a pre-prepared strategy so they can have a starting point, right?
Fantastic. And my name is David Jaffee. I run the YouTube channel, youtube.com/beststockstrategy. I will link to Alex's channel and then, my channel as well. And let's get started. So
cool.
Primarily, you just spoke about that you help individual traders and you customize a trading strategy. And can you discuss some of the more popular trading strategies that you found to be successful for many of your students?
Yeah. So look, I think especially when it comes to retail trading, there are a lot of myths out there, just trade simple technical analysis kind of thing, and you'll be fine, In reality, that's absolutely not true. On the contrary, when you trade in a market, especially as a retail client, you're basically trading against the broker, the liquidity providers, the market makers. And they know that you are looking at certain levels or certain patterns. And so they are very happy to push markets over your stops or whatever in order to really, collect you. So what I found to be quite well is that you need to add certain layers to your strategy that are not just on the visual side of things, not just like a descending triangle or any of these things. Trading against the sentiment has been, I think, one of the most popular things. We have a tool, it's called the Prime Market Terminal, where we aggregate a number of sentiment sources so that you can see where's the majority in the market actually positioned. And when you have that information and then you combine it with things like, a certain technical pattern, one that you have a statistical, relevance for, that you have researched and actually backtested many times. And then you also add, obviously, sound risk management, which means like the risk reward ratio and these kind of things. Then you have a much higher chance of winning. So I found as soon as students start to combine these kind of, let's just call them pillars, they have a much higher chance of succeeding.
And can you briefly touch upon the difference between retail trading and institutional trading?
Yeah, because, so a retail trader, let's just call us like you and me, like everybody else. We sit on our own, let's just say, computer, and we're not, and we try to trade the chart in a way, right? An institutional trader has different he sees more because a lot of institutional traders work with the flow that they get from their own customers, from like banks and hedge funds. They buy flow from other sources so they can see where are people actually in the market, what are they doing, and then they work off this information. They either provide the liquidity themselves, they are market makers. It means they take on the other side of the trade, and they work with that information that we don't see at all. So basically, an institutional or a market maker is trading against the retail traders a lot more, and the retail trader thinks he's trading against the chart, which in reality he's just being, I don't know, like pushed around, played around with the guys that see the little guy what he's doing.
Yeah, from my experience, retail traders is very similar to what Alex just said. They have a tendency to be more directional, whereas institutional traders are essentially risk-free, quote unquote, market makers or transactional traders, where they're matching up bid-ask spread differentials and profiting like 1/100th of a penny, and they're essentially making money based upon volume. And we're talking about like hundreds of millions of shares. Now, it is true that some investment banks do have a proprietary trading, and those groups do have a tendency to be more directional or use different use different strategies. But if you've heard of like Goldman Sachs making money like 300 consecutive days, the reason is that they're not really taking much risk because they're essentially just matching up order flow and profiting like 1/100th of a penny for every transaction or every tranche of shares. So
I mean, just if you think about that from a very simple perspective, in the retail space, and that's let's just say a metric that a lot of people like to ignore, even though they see it in every risk disclaimer from brokerages that most people lose. And it's kind of the saying that 90% of people lose 90% of their money in 90 days. When you aggregate client flow, the one thing that you make money on already is that you have a lot of buyers, you have a lot of sellers, and you consolidate them, and you don't send every trade to the market. You make already on the spread, because the clients are paying the spread, but you are internalizing those spreads. You are basically the market to those clients as a market maker. So you already make money from the spreads of your clients already. And I think a lot of people underestimate how much spreads and trading costs actually make up for their own losses. Typically, it's really more than about 2/3. People think they lose just by their trades, but they lose a lot through the spread costs and these kind of let's just say this is the reality of what people lose a lot more with than just the directional bet.
And that's another reason why retail traders, in my opinion, should really strive to trade very high liquid underlyings with very tight bid-ask spread differential, because if you have something that has limited liquidity, then you can sell it for, or you can buy it for, X amount, and then you can immediately turn around and sell it, and you'll get like 5 or 10 cents or sometimes 20 cents less, just predicated upon the bid-ask spread differential and the narrow markets. So trying to target something that has very liquid and deep markets is beneficial over trading something that's very thinly traded.
Yeah, especially also from a perspective of execution quality. It's not just the spread, but if you trade something that is more illiquid, then what's your slippages as well? That's something that people also don't pay attention to. You make a trade, you don't get the price that you actually wanted to trade. A lot of retail traders also use, let's just say, two unsophisticated order types. They work with market orders. If you work with a market order, you're going to get executed at a much different price than when you actually wanted to trade. Whereas if you use like limit orders, or even when you use algorithmic trading with an API, then you can do like IOCs, like instant or cancel, and you can very clearly define the price that you want to trade or not be executed at all. And that is a level of sophistication that you need to grow into if you really take trading seriously.
Yeah, and I think if I recall, about 2 to 3 years ago, Robinhood actually got in trouble because they were trying to profit more from market orders and they were giving them less advantageous pricing. So I think a big takeaway from this is use limit orders. because
Yes.
therefore you're guaranteed to get the limit price or better. However, I will say that if you're watching this right now and you're thinking that the market makers are evil or that investment banks are evil,
No,
I will
exactly.
tell you that without them, you would not have the liquidity. Additionally, just simply
100%.
for like the past 10 years, trading prices and transactional prices have decreased by about 90%. So
Yeah.
we're really splitting pennies here. Like 10 years ago,
Yes.
if you wanted to trade like one option contract, or even if you wanted to trade a few, like 100 shares, it would probably cost you about $10. That same trade is now costing you about 50 cents, and oftentimes it's free, and all you're paying are the exchange fees. So things have gotten significantly better, and the profit margins for these banks and for and for a lot of these market makers are really like tenths or 100ths of a cent.
I think you mentioned something very important here also, because obviously trading has a big aspect that has to do with psychology, right? And if you point fingers at something, someone, the market, the bad market makers, the whoever, then you've decided that you want to lose, because if you want to win in trading, you have to take responsibility. And that means instead of condemning or judging the environment, is working with the reality, not when you know these things, like how market makers work, that market orders have a different type of risk profile than limit orders, that in general market makers are not there to, they're not like a Dr. Evil or something, but they're there in it like you for the money, then you work with these things, like when you go into the jungle, you also take precautions to not, get eaten by something, so it's really about not condemning or judging these things, but to see them for what they are. And this is where I think a lot of, I would say the biggest, if we use the word evil in the trading industry, it's not really the market makers, it's the affiliates out there, it's these educators, these signal providers, these people that tell you trading is super easy, all you got to do is follow my simple ideas and it's going to work. And those people make money off their clients' losses, basically, in a way. And I think also, if you want to win in trading, you'll have to go through the experience to get slapped in the face, to lose, and then to wake up and understand, like, okay, wait a minute, what can I do differently? What do I have to do differently if I want to make this work? So it's very great that you actually mentioned that, David, that we're not saying that, or I'm also, definitely me, I'm not saying that as well, in order to point fingers at something. I just want to give people the opportunity to wake up to the reality of things so they can make better choices.
Yeah, I think that's a great point. And I think in general, that people who are successful, they believe that they are in absolute control over their situation at all times. And even if something happens to them, then they assume absolute responsibility, and they don't believe that the victim. They don't point the finger at someone else. So if someone hit their car, or they got into a car accident and it wasn't their fault, to use a bad example, they don't blame the other person, or they don't think that the world is out to get them, and instead they think, okay, this bad thing happened to me. Well, how am I going to react? How can I recapture control of this situation? So, and I also think that, look, human beings in general, they inherently want to point fingers at someone else because they believe that if it's someone else's fault, then it absolves them of responsibility to take ownership, and therefore anything that happens after that is no longer their fault. So I would definitely encourage you, if you're watching this, that regardless of the mentality or the headspace that you're in, to take absolute responsibility and ownership over your situation and not to blame anyone else.
It's impossible to win in life, not just in trading, without accountability. That's basically my personal takeaway.
Yeah, I definitely agree. Now, I watched a lot of your videos, and you mentioned distinctly trading strategy with a positive expectancy. Can you touch upon that?
Yeah, so if you're trying to trade a certain combination of patterns or rules or something that you've constructed in your mind, then what you need to do is you need to analyze that over the past. It doesn't mean, like, as the disclaimer always says, like past performance doesn't guarantee future performance, but you'll have to look at how did this method work in the past? What is the statistics, the metrics of that method over 100 attempted trades, 1,000 attempted trades maybe? How much does it differ? How well has it worked in the last 3 months compared to the last 6 months? So because what you want to know is that is the net, the result of what I'm trying to do, positive or not? And for example, positive expectancy means like if you take all your trades and you divide them by the number of the trades and you look at how much pips you made, basically, that number needs to be positive. That means that on average, your trade needs to be or needs to have a positive result. If you let's just say you make very, very little with every trade, and it works great on the last 50 trades that you backtest, and then you backtest the last 100 trades or 150 trades, and then suddenly you end up in a little negative. Then it means that your strategy is very, very, the potential for profit is very, very small. And what you cannot control is which market condition you're going to face in the future. So if you strategize and build your strategy too thin, the probability that it may actually not succeed and end up being negative, despite you thought it was positive for a certain amount of sample data, that's the challenge that as a trader we really need to do. And I really think as a trader you're a researcher of your own data and ideas, because that's the next thing. When you trade, you contextualize what you see and how you react with yourself in a way. Like you and I, we look at the chart, we don't see the same thing. We don't feel the same thing. We don't react in the same way. And that consistency is not just you and I, that consistency is even me with me from trade to trade. So the more I train myself for the exact rule set or strategy that I'm trying to trade, and the more I know what a typical result of that trade should look like and what a bad example of a trade looks like, or the longest losing streak or things of that nature, the more I can really build confidence in executing it accurately. Now I got a little bit overboard with the question, but that's essentially what I would answer here.
And in general, for your students to build a strategy that has positive expectancy, you will build in certain technical analysis indicators?
Yes and no. I don't necessarily tell my students exactly which indicator they must or must not use. I give them examples. What I tell them is that you need to decide what is your trigger, how do you enter, when and why, how do you define it, can you spot it again, if we go on a chart last year, can you find exactly the same thing? You know what I mean? Like I try to help them to, first of all, have a clear framework of what it is that they're looking for, to check the boxes of what they require to, pay attention to. Risk reward, entry pattern, all of these things. And then they build around that. Then they see, okay, where is it struggling? Is it rather a ranging strategy? Is it rather a trending strategy? How can I find out? Is the market rather trending? Is the market rather ranging? Because a ranging strategy will definitely not work in a trend, and a trending strategy will definitely lose in a ranging market. So it's very important that you understand what it is that you're trying to do. Like if you go to the desert with a race car, you're not going to get anywhere. And if you go with a desert Jeep on the racetrack, you're going to be the last one. So it's really, you need to understand the environment that you're in and build your tools around that, and understand your tools and create statistical proof for that, and train yourself on doing that in order to have a chance to win.
What are your thoughts about selling options?
My thoughts about that is that it's a completely own type of trading. It's a completely own type of strategy. People think like covered calls are just like a simple, easy way to make money. But how do you define the levels? How do you, what risk are you taking? Are you using leverage? Are you not? All these things are very important. So my answer would be, I don't really have a positive or a negative opinion about options or any strategy, unless you can make it work for yourself and you can create all the evidence that we talked about in your testing, in your development process. Because look, I didn't fall from the sky knowing every method in the world that works and not. Nobody did. So options can work, but for most people, they are a tool for gambling, unfortunately.
Now, I think, so when selling options, I think that it does definitely give you a positive expectancy. The problem falls in the tail risk. And typically people have, especially traders, they have a tendency to trade too large. So you can end up winning over 90% of your trades, and then you hit a situation where you run out of buying power because one stock, the move is far outside the expected move, and then it uses up all your buying power, and then you're forced to close out the position for a loss. And then 2 weeks later, that same stock that you closed out is now trading above your strike price. So I think that if you are able to potentially buy options, especially during times of like low volatility, so you're buying that insurance, then it could protect you against the volatility expansion event. And
it's also do you trade the option in order to be called, or do you trade the option in order to hit the level, or to trade above the level? So it's also, there's trading options is the whole own ball game, and I agree that you can definitely add it to your risk handling, and also, again, depending on the market phase. Like in certain market phases, it would not really make sense to add any option layer of complexity and risk. And but which market phase or what kind of options and how you do that, that's exactly what I encourage people to really delve into. A lot of people have very little patience and what's funny is that trading somewhat became very much cultured by now. Like kids grow up, want to be traders like they used to be rappers, I guess, in a way, some of them at least. But it's not that easy. There's a lot of work. If you want to succeed in trading, it's like wanting to succeed in the NBA, in the NFL. It's like constant daily training for a number of years. So and only then you can have a chance of really finding what are you good at. Some people are really good at defining levels, trading options like that, and others are really good in the daily intraday kind of thing. So what are you? Who are you? What are you good at? Those I would encourage people to really put more attention to, and also enjoy more the process of finding out.
I think the problem is that human beings inherently want to take shortcuts, and then when they log onto YouTube and they see videos where someone turned 10 cents or 10 pennies into 10 Lambos, or $500 into $50,000, they think that it's easy, and then the content creator is making it seem easy. And oftentimes, unfortunately, especially with like day traders, they actually charge them for the education. They aggregate them in like a Discord chat. They buy a low float stock beforehand, and then they pump it up to their followers, and then they sell it to them at an inflated price. So not only do they charge them for worthless education, but then they actually facilitate.
They make money off them, off their losses again.
Their money. Yeah, it's
and so it's on. I think it's and just I really enjoy this conversation. I think it's on those educators out there and traders out there that are not part of the scheme, let's just put it, to communicate these realities. If you know that all these YouTubers that are, with the great thumbnails and stuff, that they're basically how they make their money. If people would more understand how they make their money, then they wouldn't trust them anymore, and then they would know that this is, and I think actually, that this is going to happen. It's going to take more time, like how long does trading actually exist in a cultural perspective, I think in maybe 10, 20 years from now, every kid that knows about markets and trading will know that, I think what today is like a very big thing, like being this influencer type of financial, scammer, I guess, sorry for the word, is going to be too much of a known scheme by then for people to continue to fall for it in the extent they are today.
Yeah, unfortunately, I wish I agree.
You're not so hopeful, yeah?
Yeah, I'm not so hopeful, primarily because I don't believe that human nature is going to change drastically. Even with education, I think that, you do have people like CoffeeZilla and Spencer Cornelia who come out and they expose these guys, but there's always going to be a subset of people who are going to think that they're special. If you ask 100 people if they're better than average drivers, then probably 70 to 75% of them are going to indicate that they are. There's just psychological biases that are inherent in human nature. And I think that people are going to want to make money. Additionally, going back to what you spoke about earlier, you do have like affiliates who make it seem like it is extremely easy for day traders to make a lot of money. And then oftentimes you have the day trader themselves showing like large gains that they essentially took from, you know, quote unquote, stealing or facilitating or transferring that wealth from their subscribers. So the subscribers watch that, see the gains from like the YouTuber or like the head trader, quote unquote, and then they think that they can buck the trend and not be part of that 90-90-90 club. Instead, they want to be part of like the few percent that actually makes money. But
well, I agree with what you say. I'm just an inherent optimist. I have to say that because I've been at a number of crossroads in my life where, in theory, there was no way out or no way back to making it, more or less, and I essentially managed to maneuver myself into success in one way or another by continuing to be not naive. There's a difference between naivety and being optimistic, right? An optimist is someone that doesn't expect the bad, but also understands the complexity and the reality of the difficulty. A naive person that is just positive, you know, like The Secret. Let's all just be happy and get rich overnight by doing nothing. That doesn't get anywhere. This actually invites people to take advantage of you, and this is what most people end up being in the financial industry. Most clients, most customers. Yeah, but I also want to. The reason I say that, sorry, is. I want to encourage people. I don't want to like make it sound like trading is this very bad thing that nobody should ever do. I think it's a great thing. You know, you develop. It's basically a catalyst for personal growth, for independence, for critical thinking, for you know, all these things that I would even say make you stronger and better as a human being, you know, if you don't approach it from the perspective of just, you know, making money overnight, get rich, Lambos.
Yeah, I definitely agree. And yeah, I also believe that trading is great for decision making. I'm also not necessarily a proponent of like the toxic positivity, because that type of stuff actually invalidates other people who might not be feeling so positive, and it makes people feel uncomfortable speaking to you if they believe that you're not idealistic or objective in your feelings. What are now I know that you've also mentioned in some of your videos about reducing risk as your account grows. Can you touch upon that as well, the importance of reducing risk?
Yeah, I mean, everybody should know there's relative values and then there's absolute values, right? If you're flipping your $100 account, then it's quite difficult to apply a very, very small risk simply for the trade sizes that you have to trade. Like, for example, in Forex, typically the smallest trade size is 0.01 lots, which is 1,000 unit of account. You know, if your account is $100, that's at the very minimum a 10-to-1 trade that you're taking with every single trade. Now, as your account grows, so you know, now you have 100 grand or maybe $1 million, you're not going to take a 10 million trade on $1 million account, because you don't want to burn the 1 million account, and you don't need to make that. But that's also a misconception. People think they need to flip accounts overnight or even per year, or make you know, hundreds of percentages over the year, and I think that's inherently wrong. If you have $1 million that you can work off, it's like if you were a company that sells a product, your money is your stock, basically, in the warehouse. So you need to protect it. You need to use it to make money with it. If you just, you know, burn it, then you're just gonna lose, you know. And that's very important that you understand. From a certain size on, the percentage of gain, I would say, is less important and a lot more. You know, if you make 10 grand a month from $1 million, then you're fantastic, you know, in a way, you know, and you just make 10%, just 10% a year. You didn't beat the S&P. Oh my God, you know, you're so bad. No, you're not actually. You're living an independent life and you're growing more and more and more, you know. And so I think that people completely underestimate that, or seem to ignore that perspective, that it's very important to differentiate between relative values and absolute values. You know, if I'm making enough money to sustain my life without taking stupid risks on my capital, even when you lose, you know, you don't lose too much that you cannot stand up to fight another day again. You know, like if you what people also underestimate, there's this nice little table that everybody should know. If you lose 50% of your account, you need to make 100%. You need to double your account to get back to where you are. And people just loosely risk 50% of their accounts, and that's something, as you have a larger account, you're less and less and less prepared to do,
Yeah, I definitely agree. I think that if you're younger and you have a smaller account, then you're also, in all likelihood, you're probably more risk seeking, as younger people have a tendency to do more risk seeking. And then if you have a $5,000 account and you want to learn and you end up like blowing up your account, it's not the end of the world. Like, is it going to sting? Yes. But in hindsight, it might actually be beneficial to you because you might actually learn that trading is not a game and that you need to make sure that you protect your capital. If you're a little bit older and you have a lot of money, then you definitely don't want to lose that money, and also you want to mitigate portfolio volatility. I definitely think that mitigating portfolio volatility is extremely, extremely important. And even if that means that you're potentially costing yourself a little bit of upside, I think that it's definitely worthwhile to protect your capital at all costs and mitigate that portfolio volatility. The other thing is, I think it's vital to make sure that you reduce the stress that goes along with trading losses, because if you do experience a situation where you lose a lot of money, then maybe it starts impacting your sleep or your relationships. And I don't really see many people talking about that.
Surely it will. Not maybe. It surely will. I think we should really call it for what it is. You're not at your right mind if you get punched in the face like that. It's like Mike Tyson said, everybody has a plan until they get punched in the face, and if you get punched too hard, then you're not in your right mind anymore. You're afraid to execute your strategy that you were so confident about just moments ago, more or less, or days ago. So that's also part of being able to continue to be successful, is that you don't put yourself in that psychologically weak state. And that is completely on you, your responsibility to not maneuver yourself into that by greed and recklessness.
Yeah, I definitely agree with that. Can we shift gears a little bit and talk about your hedge fund experience and some of the pressures you experienced while running a hedge fund?
Yeah, like when you, or in general, when you manage other people's money, there's another layer of pressure or expectancy from others, from outside on you. And you may, when everything's great, you're everybody's darling, you make money and everybody's happy. But when the market, starts to become sometimes a bit difficult, or you're not as profitable for a certain phase, which by the way happens to every trader, to every strategy. No single trader or strategy works all the time. Then you start to, get calls, you get pressure, you get like all these influences from the outside that are actually detrimental to your psychological state, to your ability to perform. And this is also at some point why I got out of that game, not because I couldn't handle the stress or any of that. It's just like, guys, I'm not a tool for people with capital, once I made money enough for myself to be independent, that's exactly what I took from life, I didn't see myself become this corporate money manager for some other dudes, more or less. But I got out of it to walk life in my own pace, in a way, So I really think that the stresses and the pressures in the professional financial industry, they also okay, that's a judgment from my side. I don't know if it's completely true. Everybody needs to decide for themselves or find out for themselves. It encourages people to find ways to make money that somehow involves other people to lose money, and that's something that also I wasn't, it's not what I like to do. It's not what I like to be. It's not what I like to spend my life with. And so in short, the answer to your question is that there are a lot of added pressures and expectancies from powerful people in the space that take away the what trading is outside of that space, and yeah.
There probably are a subsect of people watching this video who are interested in starting their own hedge fund. Can you talk about your experiences raising capital?
Yeah, so first of all, and I think a lot of people got this thing backwards. They want to raise money first and then figure out what they do with the money, basically. First of all, they're not likely to be successful with that because people that give money, or professional money givers, they want to have a track record. They want to understand, what are you doing? What is your strategy? What is your... So I would recommend to anyone who wants to get into the game of managing money or scaling up his own game, you know, by managing bigger amounts of money, is to have that first. You need to have a certain track record, you know, at the very least a couple months, half a year is like literally nothing. This is where things start. Ideally,
I thought it was like 2-3 years in general.
Yeah. Well, look, it depends on the size of the investors that you're looking to attract. You know, but yes, you're right. Certain capital sizes, they would never allocate money to anything if there's not at least 3 years of a success record. And that consistency is already something that a lot of people that want to get into trading, they never actually get to that place of building that. So you should, if you want to attract capital or build a business that manages money, then you need to prove that you can manage money. And that is the part that a lot of people seem to ignore. So the raising part as to what tactics you're using in order to raise money, sales tactics or whatever, you know, straight line persuasion or whatever sales you want to use, those are secondary in my opinion, because at the end of the day, if you have a good product, you have an audited track record, you know, like as you grow your track record, go and find even go to one of the big KPMGs, whatever, and have your results audited and verified, or in Forex, use at the very least a MyFX book, a public one, that is also verifying your MetaTrader account to be accurate and true, so that you can really build a verifiable record. And then when you approach people, it's very simple. Actually, there's a lot of hedge fund registry, Barclay Hedge, just even social media. There's a lot of social trading abilities these days that didn't exist at the time when I was involved in this space. You know, you could even raise money from retail clients, tens of thousands of them if you want. You know,
yeah, just a lot. I think now in the U.S. you can manage about $25 million without even having to register.
Yeah, and you know, and so but the way to get there is not that there is any magic ingredient of how you raise that money. It's the quality of your product, and the quality of your product is shown by your track record and by your reliability to reproduce results following a certain method and not a gambling.
I definitely agree. What are your thoughts about using like hedge fund incubators or things of that nature? What do you mean exactly? I think I saw this guy like Bridger Pennington or something like that. Like he advertises on YouTube, and I don't know if you're.
I think I don't know this particular guy. I think, you know, I know what you mean. Like people that charge money for that, you mean, to basically
like introductions and things like that.
Maybe they work. I have never seen any one of those guys get anyone any money personally. You know, like no offense. I'm not saying that those guys don't, but I personally have not seen. This is just a business for them. Like affiliates sell trading signals, those guys sell the dream of allocating money.
And do you think in the future that you might go back to operating a hedge fund, or do you think that it's not for you?
Actually, it's an interesting question that you would ask me that. The answer is yes. However, probably not in a traditional finance space. I'm a lot more involved in the DeFi space recently, or for the last couple of years. Why do I like that? Because let's just say if you are DeFi is like being able to participate in the infrastructure, like market makers, like liquidity providers, these kind of things. You know, in DeFi, you can provide liquidity to a pool so that people can swap one token with another. You provide the liquidity and you make a fee from the swaps that people actually do. Now, then you have other risks. If you have different tokens, you have this thing called impermanent loss, you know, where the price of a token may change while you're in the pool, and you need to mitigate that risk by hedging it out with other, let's just say, derivatives or whatever. So those are kind of strategies that kind of reactivated my hunger to offer that as trading strategies to the world again. So I'm actually in the process of finding out in which shape or form I may or may not do this. So I guess the short answer is actually yes, unexpectedly, but in a newer, more decentralized, accessible, fairer space, I would say.
And from what I gathered, you're pretty well traveled. Like currently, I believe you're in Dubai, and then you spent a lot of time in Europe. Can you talk about some of your experiences traveling and potentially like mitigating taxes, or some of your favorite places that you've lived or that you visited?
Like from a tax perspective, I'm sorry, I can't really, I'm not an expert on any of that. At the end of the day, wherever you have your life, wherever you live, you got to obey to the local rules, but the reason I travel is really, to meet other people. Like Dubai, for example, is from the outside, it looks like very posh, very shiny, whatever. And in fact, there's a lot of not so great things in Dubai as well. However, there's also a number of very forward-thinking, new type of young entrepreneurish spirit here and people that is great to connect with, that is great to take, impressions from. So I think traveling mostly helped me to be that, to continue to find interesting and more interesting thing in life, because if you settle, quote unquote, you kind of close up, right, for what is possible. But if you're always going around and you're looking for new things and you get new impressions, and you're not like, married to your own comfortable space, I guess, then that is, I think, helpful to always develop into new things. And like I said initially on this call, that if I had to name one thing that made me successful in life, it's exactly that. Always be developing. I may trade something completely different, as I am actually, than what I did 5 or 10 years ago. Living in a different place, having different people that I work with, and I think that this whole traveling thing, or the openness to whatever is out there in the world, it's such a big place. You could be going into like posh spaces like Dubai, or you could go to very down to earth spaces like Bali, for example. And there's a lot of this internet world has opened so much opportunity to literally everyone, that I'm really a supporter of this lifestyle personally. I enjoy it.
What are some other places that you visited that you've really enjoyed?
Personally, like, first of all, I'm from Berlin. I'm from Germany, Berlin. That's my where I come from. So I would definitely recommend anyone who's never been there to at least go and have a look at the city. I'm a fan of the Mediterranean. Cyprus is a great place there's a lot of Forex business actually out there, but those are more, as we established, more casinos than financial providers. Then Dubai is a great place. I haven't been, for example, in Singapore or like more in Asia yet, which I'm also wanting, or China, which I'm really interested to go and see also, because obviously it's such a dynamically evolving part of the world. So then also in the US, obviously, I still enjoy, like, anyone who hasn't been to New York, Los Angeles, down south, Florida, these kind of things, I would really encourage people to go and see the world and connect with people for the impressions, find out what you click with. Again, it's like really trying multiple trading strategies. Maybe the time zone fits you better than others. Maybe the weather, in some places you feel depressed and others you feel just a lot more energetic. And it's really not, whenever you go into the sun, you're going to feel better. Or when you go into a rainy place, you won't. No, you won't. That's not true. You have to find out, and this is what I would really want people to be more open about, less judgmental and more experimental.
Great. Do you have any parting words for the audience about like trading or life in general that you want to share?
Yeah, well, first of all, you got to be your own biggest believer, right? I would definitely tell that to anyone. But you also have to understand that nothing in life that is successful is naive. Everything that is successful, whether it's in nature, in engineering, in business and finance, has some level of sophistication and depth and complexity to it. Doesn't mean that everything needs to be extremely rocket science. That's not what I'm saying. But you wanna pierce through the surface of whatever you really want to be successful with, whether it's rapping or trading, you know. And there is going to be a phase of hardship and learning, and you should embrace that and not feel pity about yourself doing that. So those would be things that I would really want to give everyone, because even, you know, I see it in my mentorship. Even when you give people everything they need in order to succeed, there's still a very tiny fraction of percentages of people that actually made it. Why? Because they are the ones that put in the effort, that go through the hardships, that learn from setbacks and not give up on them. So really, you know, persistency, and persistence doesn't mean I just continue to jump from one thing to another forever. Go and try certain things, but then if there's something that you feel you click with and it's difficult, face the difficulty with, you know, and be happy about your ability to challenge it and make it work.
Yeah, I definitely agree. I think it's important to be an expert in a select things. And I know a lot of people say, oh, well, I prefer to be an expert in a lot of things. The problem is that if you want to truly be an expert, then you have to dedicate a significant amount of time and experience, and you're limited in the amount of things that you can truly be an expert in. So I definitely think it's important and much more vital, and you'll be much more successful if you're an expert in 1 to 3 things, as opposed to being a jack of all trades, which basically means that anyone who has an expertise in anything that's valuable is going to be more valuable than you are with superficial knowledge of a wide breadth of topics or wide breadth of things.
I agree. And by the way, even when you, let's just say you're not an expert in a lot of in-depth things, but you're an expert in managing these things, you know, and then you work with experts, then that's also not bad per se, because then your expertise or your level of expertness is dealing with experts, for example. So you're an expert in that. So just to make people understand that the perspective, your ability to really see things for what they are through your own lens is super important, and that's something that you actually cultivate over the years. It's literally nobody's born with that, I would say, but literally everyone can get to that place with enough dedication and and love for his own game, I guess.
Fantastic. So Alex, I'm going to put the link to your channel in the description of this video, and then I assume that you'll link to my channel as well in the description of your video. And we really appreciate it. This is David Jaffee with Best Stock Strategy. Alex, what's the name of your channel?
It's Alex Douedari, basically my personal name. So I don't have like a headline or anything like that. But really great. Thank you for having me. I really enjoyed this conversation a lot.
Thank you so much. I hope that we really appreciate it. And, you know, it's very late at night for me and very early in the morning for Alex. So we took the time to be valuable.
Great, we made it.
You. So thank you so much for accommodating the schedule.
Thank you.
And hopefully in the future, we'll be able to do this again sometime.
All right. Thank you, guys. Bye-bye.